So Palantir just reported earnings that were good. The numbers were decent, better than decent, and yet the stock tanked. The stock isn't looking much better this morning. So what in the world is going on with Palantir? What happened in the earnings? What's causing this and what comes next? Don't click nothing. Don't smash nothing. Don't buy nothing. Let's just focus on what's going on right now. So yesterday, we heard Alex Karp on the call basically say something very important. Palantir is on fire. And I think the numbers that we got absolutely justify that. The numbers that we got from Palantir yesterday show dominance, show growth, and show excellence across the board. And I don't think he's bullshitting when he says that Palantir is on fire. I think that a lot of this short-term reaction, the price action, is going to confuse a lot of people. Now, the Q1 numbers that came out, we basically seen absolute insanity. 139 deals of $1 million or more in the first quarter alone. Imagine closing 140 deals of $1 million or more in one quarter, in 3 months. Just do the averages. The US commercial remaining deal value jumped by 127%. That's basically the amount of deals that Palantir still has that it hasn't fully executed on. Basically, $2.3 billion of deals, 127% growth in just one quarter. And we basically have the main culprit of why we're getting these incredible numbers, which is AIP. The game changer, the absolute insanity that we're seeing from Palantir is AIP taking over. It is quasi-monopolistic, it is insane, and it is just getting started. Now, in today's video, I do want to go over the numbers with you. I'll actually talk about what happened with the price action as well, because I know you guys care, but I want you to focus on the business side more than just what happened with the price. Now, revenue-wise, we're looking at $884 million. Absolute insanity. That's a 39% growth year over year and a 7% growth just on a quarter-to-quarter basis. Imagine looking at a company that's driving a 40% revenue growth and is still as profitable as Palantir with a 24% net income margin. And it is absolutely insane to me that people still are not getting this, but instead focusing on the short-term volatility and price action. Now, if we flip to the next page, I don't want to keep it brief today. So I want you guys to think about US revenues. So the US revenues of Palantir, which is where the focus is by design of this company, the US revenues of Palantir are absolutely insane. Look at the numbers right here. We're looking at 55% year-over-year growth, 13% quarter-over-quarter growth. That's insanity. That is where Palantir is focusing their efforts right now. And you can see the result is absolutely insane. I could not be more excited about what Palantir is about to show us, because to me, this is just a start. Now, I want to move on a little bit further here, and let's go deeper. So, on the US commercial revenues, I want you to pay attention to what we have right now. Right now, we just got a $255 million quarter on US commercial, okay? If you actually do the 1 year run rate on that, that is the first time that Palantir has $1 billion of US commercial revenues run rate for the company. That's a massive milestone that nobody's talking about, especially given the fact that is a 71% year-over-year growth in US commercial revenues. Palantir is firing on all cylinders, and 80% of the retail investing community is going to be focused about the price, as always. Now, going a little bit deeper than that, well, if you look at the government side, which nobody talks about anymore because who cares about the government business? But even the government business of Palantir is firing literally on all cylinders. It's firing on cylinders they didn't know they have. So the government side, we got $373 million. So 45% growth just on the US government revenues. That is absolutely insane. The company could not be doing better, could not be showing more dominance. We'll talk about the problems. We'll talk about the issues. Not everything is peachy and rosy. There's, of course, risks and there's, of course, issues. Nobody's perfect. This company ain't perfect. But basically, they could not execute better. If you've asked any CEO to execute, this is probably as best as you get from any CEO in the market right now. That's why I always said that Alex Karp is the top 3 CEO in the world. And these results prove it again. Now, I want you to pay attention here. So, the guidance that Palantir gave us for the entire year of 2025 is almost $4 billion. Now, $4 billion on the year. I just want to remind you that just 3 years ago, the number was $1.5 billion. Palantir went from 1.5 to a guidance of 4 billion, which they will meet in just a couple of years, 2 or 3 years. The growth is absolutely insane. Now, for those of you who don't know what the rule of 40 is, it's a pretty big deal. Essentially, what you do, when you look at growth companies and tech companies, there's a way to kind of compensate on the high PE ratios that you usually get. And the way to do this is by looking at this metric called rule of 40. Essentially, you take the growth rate in percentages and you combine it with the free cash flow margin. So if a company is growing and it has also a high free cash flow margin, which means that the growth is not empty calories, then if you can get a score of 40, essentially, let's say 20% growth rate and 20% free cash flow margin, 40 would be the gold standard. That would be great. A company that has a rule of 40, chef's kiss. Well, guess what? Palantir just gave us a rule of 40 of 83. Now, with the exception of NVIDIA, that I think has a rule of 40 above 100, and we understand why, because it is a monopoly at this point, Palantir is probably the close second. I don't think there's a company right now in the market that has a close rule of 40 to Palantir and NVIDIA. At 83, this is what monopolies look like. Especially if you look at the margin, the net margin of Palantir. We're talking about the net margin, not the operating margin, not the EBITDA margin. The net dollars in your pocket is 24 cents on the dollar. And they're doing it with zero leverage, no debt, and $5 billion of cash. That is insane. The way this company is managed, both on fiscal responsibility, the way the balance sheet looks, the way the growth looks, the way the profitability looks, that is literally unicorn. I've never seen a company do both growth like this and profitability like this. Now, talking about that, let's talk about the problems. I mean, we're not going to ignore the risks. We're not going to ignore the issues. I mean, we got to be fair, right? So there are a few risks about this company. There are a few wrinkles. We're not going to sugarcoat it. We're not going to sweep it under the rug. Let's talk about everything. Number one, I'm not going to sit here and say that the valuation is good with Palantir. The valuation is absolutely insane. It is out of the world. The valuation is sky high. Palantir at this point might be one of the most expensive companies in the stock market altogether, right? The premium there is insane. Number two, it's trading at 80 times forward sales. That is very, very expensive. We can all agree here that Palantir's valuation is very, very rich. It is insanely premium valued. Now, the other part about Palantir that people kind of forget is that they really have, let's call it mixed non-US sales. In fact, they're non-existent, or at the very least marginal with Palantir. And maybe that's by design, and I can agree with that being the goal of Palantir, focusing on US first. But with this geographic concentration on the US side, that opens up a lot of geographical concentration risks. If the US is the only dominant place that you have geographically, that's just extra risk, and you gotta acknowledge it. Now, on top of it, we have a huge key man risk, because if Alex Karp leaves Palantir, there is no Palantir. Palantir is Alex Karp. Alex Karp is Palantir. If he leaves, basically this company goes to zero. Now, top 20 clients, right? Right now, almost $1.4 billion. That's massive. The problem is, and that's the flip side of that, when you're holding $1.4 billion of sales by only 20 clients, that also adds a layer of risk. It's called client concentration risk. And of course, because of so much government money coming in, you're always subject to Washington insanity, which means regulation, which means change of policies. A lot of governmental changes can really impact Palantir's revenue and the bottom line as well. So you got to acknowledge that, right? Now, on top of that, we're looking at these three things, which I want you to remember, because at the end of the day, this is what I take away from Palantir, especially what happened yesterday, right? Palantir, as I said before, is a freaking unicorn. I mean, this is Victor Wembanyama, if you watch NBA, right? The way they generate profits and the way they generate growth. So a company that gives you so much profitability, such high margins at 40% growth, that is almost non-existent. Again, you can look at NVIDIA, but they're monopoly. Same way as Palantir is quasi-monopolistic. Now, AIP right now is basically killing it. AIP is converting pilot clients with absolutely no spend to 8-digit spenders in a quarter. That is absolutely insane. That is the quickest onboarding of high ticket clients I've ever seen in my life. And the net dollar retention just proves how, how insane that is. 124% net dollar retention, which means that it's not only industry leading, it means that clients are not leaving. Clients are staying. It's a very sticky business, and they seem to be know what they're doing. Now, the bottom line here, and this is where I want you guys to pay attention, right? So Alex Karp is not apologetic about the fact that he is US centric, right? He's always been open about it. He makes, no apologies about it. US first, and if you don't like it, well, take a hike. He doesn't care, and most of Palantir investors basically are in the same boat here. Number two, we're talking about massive amount of clients that is absolutely industry agnostic, starting from the AARP to Hyundai to AIG, Citibank. I mean, you name the clients. Oh my goodness. I mean, this is absolutely a never-ending list of clients of, airline industry, shipping industry, insurance industry, banking industry. I mean, I can go down the list. It is absolutely industry agnostic. Now, on top of it, as I said before, this is a monopolistic business. And if you don't believe me, look at the margins and the growth. The only way a company deserves a rule of 40 of 80, in which basically the growth and the margins are that high, is if there's nothing else. If they are the only game in town, and Palantir is the only game in town. Now, of course, you have seen yesterday, and I don't know what happens today, maybe it continues, the decline in the stock price after the earnings. It's a volatile stock. A lot of expectations were baked into the share price before earnings. And I don't know if Palantir could have done better to prevent the stock from falling after so much weight put on their shoulders with the expectations unrealistic. And it is a volatile stock, but as I said before, it is temporary. I think Palantir is trading at a huge premium. I think we can all agree to it. It's not a cheap stock at all. Nothing about it is cheap. But I just want to say something else. Since February of this year, when Palantir first hit $115 before it dropped to $70, and then as it went up back to $125, and now today again, I've not changed my message. And my message is quite simple. If you have been buying Palantir since 2020, since 2021, since 2022, since 2023, and you are sitting on 100, 200, 300, 400% of gains, some in my community are a lot higher than that. You're sitting on lots and lots and lots of unrealized gains in Palantir. At this valuation, at this juncture, the responsible thing to do is to trim 30% and to continue dollar cost averaging into the stock slowly. So you take some chips off the table and you continue to DCA into the company so that you protect your ASP. You gotta be the responsible adult. You cannot be a YOLO 20-year-old kid. This is a fiduciary duty of you to your future you to not be an idiot. If you're up big, trim 30%, continue to DCA, and that's as simple as I can make it for you. A lot of people can't even process that nuance, and when they hear me say trim 30%, they think I'm no longer bullish, but that's fine. I'm not talking to them, I'm talking to you. Okay? If you want to get better at this, if you want to join a community that actually does this the right way, I invite you to join our academy over at patreon.com/Tom Nash. Would love to see you there. All the links are in the description, also in the pinned comment. Join us. We have meetings every week. We have an active community. Would love to see you there. Step away from the noise. I'll see you in the academy. Peace.